Well, I'm not trying to focus on the news and noise, and there's lots of it, so it's impossible to forecast the outcome of the election. I have an economic view on this, and of course the indecisiveness of the Brexit procedure is bad for confidence, or business confidence, consumer confidence in the UK is down, and the growth has been on the weak side in the pan-European spectrum. But of course the labour market keeps still quite up, so it's quite okay. But the equity market is an overseas market, so profits even from a lower pound, that has been okay. And but we have stayed away from UK risk assets because of the not clarity situation due to Brexit.
If we do see a Conservative victory with a majority in the House, which is what some are suggesting will be the outcome of the election, given that the Conservatives are leading in the polls, would that encourage you then to go back in and look at riskier assets in the UK?
Not really compared to the US or compared to continental Europe, because nothing will be resolved. But of course, that would be the outcome, would be most appreciated by markets. Than any other alternative, like a Labour government or a hang parliament, would be worse for capital markets.
Okay, Hadley's got a question.
Pete, it's Hadley out in Abu Dhabi. I want to ask you more broadly about those European markets, because at the end of the day, we're coming into the NATO summit in just a few days from now. President Trump, of course, making a state visit to the UK. He's got some strong, opposition to his arrival there, no doubt. But certainly from those European leaders, it's not just about security for them, it's also about economic policy. How worried are you as we head into the end of the year that the president's policies when it comes to China could be replicated when it comes to Europe?
Well, the underlying trend in European risk assets is determined by ultra-low interest rates, by a stabilizing economy, and equity markets are about 50% cheaper than the US market. So that's the trend which goes into the next year, which is very favorable for risk assets and particularly for equities. Now, when you refer to Trump policy and related trade relations to China or to security, NATO related, that's not really new news. President Trump has been openly hostile to the EU in all respects, so that's not going to move anything. He will just confirm very negative expectations. That's not going to move the needle. And NATO, of course, that's more of a structural issue. It's clear that the hostility of the US will lead to a more independently oriented China and also more independently oriented Europe, but that's a very slow process here.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.